Hello, everybody. It's good to see you. I'm Annie Brock, President and CEO of the Leader Transition Institute. We are a 501c3 organization based in Maryland, and we prepare and walk beside people who are making pivots in their lives with a special focus on service members, veterans, and their spouses who are transitioning from active duty to the military sector. Each month, we provide a virtual transition program that supplements the DoD mandated programs. That's the Department of Defense mandated programs, if you're not familiar with that acronym. And we talk about change, communication, purpose, vision, all those things that are important to people in their lives. And most often, they haven't thought about it. So once a month, we meet here in the live stream format and talk about subjects that are applicable to people who are in transition and actually applicable to all of us who are just alive, because we focus on the areas of personal growth. And the reason why I say anybody that's alive is because, have you ever seen a living plant? It's growing. A living plant grows all the time. Plants don't stop growing until they die. And so I think that what we talk about, the kinds of things that we talk about, are applicable to everybody who's alive. Which leads us to the other side of what we're talking about today. And today we're talking about life insurance. And we're grateful to have Jeremy Carr on with us. He is from the Army and Air Force Mutual Aid Association. They are a nonprofit a group based in the Northern Virginia area, and they have a big focus on life insurance, and I believe they also have a wealth management practice, and Jeremy can correct me if I'm wrong. So today we're going to talk. Jeremy's not here to sell you life insurance. First of all, let's get that clear. We are here to talk about the different kinds of life insurance, why you should have life insurance. And it's something that scares a lot of people because they think it costs a lot of money and nobody wants to think about their own mortality. But I can tell you that I've been in a couple of situations where there wasn't life insurance left when somebody passed away. And I felt just crushed for the spouses that were left behind. And so it is very important, regardless of whether you are a young person or whether you are in midlife, that you think about whether or not you need life insurance and to take action on that if you decide that you need it. And so that's what we're here to talk about. Jeremy is retired from the U.S. Army. He is a pro when it comes into the life insurance arena. He's not a salesperson for life insurance. Will talk to you about the ins and outs of different kinds of whether term or whole life, that kind of thing. He has a family, a wife and two daughters. They live in the Orlando, Florida area. I asked him where his favorite assignment was on active duty, and he said Savannah, Georgia, which always sounded interesting to me because I'm a lifetime Girl Scout, and that was the home of Juliet Gordon Lowe, the founder of Girl Scouts. I need to go there one day and see it. So thank you, Jeremy, for being on with us today. And let's start by I'm going to give you a few minutes. I want you to introduce yourself and say a few words. But the topic I want to get us started on is, why should anybody think about having life insurance? What's important about it?
All right. Well, I appreciate the opportunity to be here. Thank you very much. And a little bit about me. As Annie mentioned, I did retire from the Army just about 2 years ago, and I really quickly found that I wanted to get back to giving back to veterans and their family members, which is what got me into the role with AAFMAA that I'm in right now. I've been blessed with the opportunity to be able to speak with veterans and family members, excuse me, on a daily basis. And to me, that is just amazing to be able to talk and hear different stories from different people all over the world, really, and hear their stories in different places, from transition to 20 20 to 30 years after retirement, things like that. So really being able to see on the insurance side of things from kind of the 30,000 foot view, where like many of you a couple of years ago, I didn't know what I didn't know about life insurance. I knew I always had SGLI, and it's a pretty steep learning curve when it gets into that time frame to make decisions. So it's been really good to be able to be an active part in that decision-making process for families, regardless of the path that they choose with that. And as far as the types of coverage and things like that, I'm sure we'll kind of dive into that a little deeper. But for the most part, what people look at is term and whole life options. And as Annie mentioned there, it's not something, especially when we're younger, we think about, it's not something I need just yet. But with everything going on the way that things are today, it's definitely a good idea to do the research, do some homework, and see if it's something that's going to make sense for you and your family, to make sure that you have something there. And that's something that I really enjoy doing. A lot of my peers do as well. Again, like I mentioned, with whatever path you choose, whatever organization you choose, as far as coverage goes, having people that you can trust and just talk to candidly about what you need, what you don't need, that's super important. And that's something that I was able to take advantage of, and am able to do every day, and have those conversations with folks. So pause there.
Awesome. Thank you. So Jeremy, uh, what is the whole point of having life insurance for people? Let's just make that clear. The whole,
Yeah,
that what's the point?
I think, from my perspective, I look at it as a means for the family to continue to maintain course financially, whatever that looks like, and for whatever stage of life that person might be in. If it's someone who's early in a second career, first career, whatever the case may be, you're looking to make sure that you've got something that's going to cover your income, your assets, and things like that. And you start breaking down the other things like your debt, your income, mortgage payments, education for your kids, if that's applicable. So all of these things kind of fall into that bucket of things to consider when it comes to life insurance. So those are definitely all important factors that you want to think about. So if something were to happen, the unforeseen were to come your way, what would your family be able to continue in your absence? And having life insurance does exactly that for you. At least gives the ability to continue that course. For a prescribed amount of time, whether it be the first few years, or for you know in perpetuity, depending on the kind of things that you set up as far as coverage options. There's things that will, make sure that for a specific period of time and dollar amount, you can get very scientific with it. A lot of people will do that. They kind of know exactly what they want as far as a dollar amount for the duration, because at the end of that duration, that's when, that increased risk period ceases. So they get past that bridge, and then the need, or the necessity to have that a significant amount of coverage will kind of subside there, and then maybe some different smaller options will be the case. And that's how you can make sure that you map it out to a point where you're never over or under insured, by kind of taking that long look at things and making sure that you've got something. On the flip side, just like many of us that served in the military, you have SGLI. It's one of those things that you elect early on or at some point in your career, and you just kind of forget about it. It's something that gets deducted automatically every month, but you have that peace of mind to know that if something ever happens, it's there. A lot of people will do that. They'll find a product that they can plug in for a long period of time, that anytime during that period, that amount of coverage that they have is going to be adequate or more than adequate to cover the needs of the family to move on.
So a question, because you talked about the family. So what about somebody who's single? If there's no family, is there a point for somebody to have life insurance?
I would definitely investigate it for every person, regardless of their situation. If they don't have family or an immediate family, everybody has some risks and things that are going to be there. There are those that just don't need it, but it's definitely worth doing the research and taking a look at that. If you've got investments in business or real estate or different things like that, something will need to be arranged in order to close those loops in the event that you were to pass. So as I mentioned, some people have that built into their life. So if something were to happen, everything's already arranged. Everything is going to be handed off and taken care of. But on the other side of that, having some coverage may be something that's necessary in order to cover, the expenses of either transferring whatever those assets may be to other business partners or distant relatives, or whatever the case might be for those folks.
So one of the things that I've talked to people about who are single is that generally we are healthier when we're younger, and with a level term policy, then you get whatever rate you start with. You have that until the policy ends. So, is there a benefit for somebody who is single and healthy to get a substantial life insurance policy based on the fact that they would like to be and plan to have a family in the future, that then they would be covered and then they have that low rate as they go forward?
Absolutely. I mean, as early as you can dig into that, the better, because as you mentioned, with health, age, those are definitely big factors when it comes to your insurability. And there's definitely, products out there, regardless of your age. Health concerns can be a limiting factor later on, or depending on the extent of those things. So if you're young and healthy, regardless of your circumstance with family, I definitely recommend doing that. It's better to have it and not need it than to need it and not have it later on, especially if later on, you do find yourself in a family type situation, you've got a spouse, children, things like that, and you're older in life, it's going to be more expensive. So if you already had something like that in place, it's definitely going to be a game changer when it comes to, saving money over the long haul and making sure that you don't run into any of those mitigating factors, whether it be health, age, or, that's just those things that are beyond our control as we move forward in life.
Okay, great. Thank you. So we've covered about why somebody should have life insurance. Let's talk about the two basic kinds of life insurance. At least as I understand it, there are two basic kinds. There's term life insurance, and then what is called permanent life insurance, or more commonly probably called whole life. Can you
Right.
talk about the differences between the two?
Of course. For term life, you nailed it right there a couple of minutes ago. Term is something, especially level terms, where folks can get into something like that, and they can specify the amount of time that they want to cut the coverage. And that's where, if you've taken a look over, maybe it's your second career or the period of time where you have a mortgage or something like that, you can select the amount of years that you want that coverage. For some people, you want to just get the max amount of time that you can when you're young and healthy, so that it's done and you don't have to circle back, midway through that time period, and you can take advantage of the savings that we just spoke about as well. And also, that's going to keep the premiums the same for the duration of that time frame. The coverage is going to stay the same. So it's just, again, it's one of those things where you can plug it in and you can walk away, move on with life. It's that coverage is there, and you don't have to worry about that. So that's one thing that's really nice about the level term policies, is that it's there and it's going to stay solid. You don't have to worry about what the market's doing or anything like that, and it's going to be able to protect you. It's going to be really similar, for those of you that experienced SGLI or something that was, that just was there, that you don't have to worry about. You don't have to maintain it. The whole life, on the other side of that, that's more of an investment over time, and you can choose different time periods that you want to contribute to a whole life period. Most commonly, people will pay into a whole life policy for their lifetime, whatever that period may be. That's usually going to be the most cost effective on a monthly basis, as far as keeping your costs down. You, in some cases, can decrease the amount of years that you may pay into a whole life policy, so that it can be paid up or paid off or paid in full sooner, rather than having that long-term investment for life. Some people will choose to do that. It's a little bit more money each month, but the trade-off there is that your overall investment's lower. The time that you have to make those premium payments shrinks as well. And the good thing about a lot of the whole life products that are out there, and definitely do your research and find out which is going to be best for you, but most will have an opportunity for that policy to grow cash value. So that's where the investment part of it comes into play. A lot of times it's based on premiums. There's a crediting or an interest rate that's applied on an annual basis, and members of the organizations that subscribe to these type policies will see growth both in their death benefit, where that will, maybe they start with $100,000 policy when they're in their early to mid 30s or 40s, whatever the case may be. But over time, the death benefit that they've chosen is going to increase over time based on the crediting rates that they have with their policy. And with many products that are out there too, there's that cash value accumulation, where you may hear people that will borrow money against or borrow money from an insurance policy, and that opportunity exists in a lot of policies that are for whole life. There's the opportunities to find multiple factors that are going to be beneficial. Is there, maybe going to be long-term care that would be included in a whole life policy, to where you have the opportunity to convert that product to a long-term care settlement option as opposed to having it pay it out as a death benefit. Because as we get older and we get into that time frame, our needs may be different, so it's hard to predict that. But again, the benefit of doing that when you're young and making those decisions when the costs are lower, it just really sets you and your family or extended family up for success, so that when those times do come with a whole life policy, there's a lot of options that will really take care of things. So um, I think that's the kind of the big things. Term is going to cover you for a period of time that you need it to cover you, and then it's going to stop. You have most of the time the ability to pick up a new policy at the tail end of that based on your needs at that time and your health. And then whole life is going to be something that is going to be a policy that's going to stick with you till the end.
So, okay, great. Now, question about whole life, because we talk about level term, and level term means that your premium stays level during the entire time that you have the policy, as opposed to a premium that increases based on your age, which is what VGLI does for some people
Right.
who some people go to VGLI, the Veterans Group Life Insurance, and that premium increases every 5 years. It's really outrageous, and we tell people, unless you are uninsurable with every other company that's out there, please don't do BGLI.
Mhm.
Does the premium for a whole life policy stay the same
In
during,
most
and in general? Because I understand that you say that you can adjust the premium, but in general, does it stay the same?
in general, once it starts, it stays the same, similar to a level term. And the only difference being that if you elect to do different time periods, it's still going to be locked in. So whatever period of time you choose to pay that premium for, so that it's paid up in a specified amount of time, the premium is going to stay the same. Even if you choose to do that for a whole life plan, to where you're going to pay for life, the premium stays the same for the duration of that policy.
Okay. And so one of the things that life insurance is based on is on our health. And that, which is what we talked about a few minutes ago, about that it's always better to get your life insurance in place when you're younger, and because we tend to be healthier then, and we can get better rates. What kinds of health issues should we be worried about? And are there certain things in general that make people uninsurable? I know that it's basic, it's on an individual basis, but how does an insurance company know what your health situation is?
Well, I think, every insurance company is a little bit different, but I think one thing that's pretty standard across the board is you're going to, at some point, do some kind of an application and fill out a health screening, and that's going to give the insurance company a snapshot of your health, at least, for some of the bigger type things over the period of your life, and more recently within the last 5-year time frame, so that the insurance company, the underwriting team, is going to have an opportunity to see, what kind of risk exists in providing insurance to a specific person based on their age and their health factors that are going on at that time. As far as specific health factors that are involved, in talking about the veteran community specifically, there's things that go along with that you want to do your homework and make sure that as you do your research with companies, and you have some of those things that may be going on that are service connected, whether they're due to, there's so many different ways that we will come out of service with things that we didn't show up with. And there's just a
Mhm.
big list of what that may look like. I mean, just some of the simple things that are pretty common is something like sleep apnea, or something like post-traumatic stress or anxiety. Things like that are pretty common. Those things typically on their own, well managed, are not generally a big problem. What becomes a problem is when there are a lot of things that will compound any one of those things, or just, kind of a blend, where the risk increases, where if you've got chronic pain, you're not sleeping well, you've got other things that are going on, it's going to affect your quality of life, and things like that. So the advice that I always give is make sure that you take advantage of the time that you have in transition. That's why that 2-year period, whether you're retiring or ETSing or EASing, whatever the case may be, do your research during that time and lock something in then, rather than waiting until you're right in the heart of your transition or afterwards, like I did. I waited I don't know, 6 months or a year after I retired from the Army to decide what insurance I was going to use in place of VGLI if I decided to break away from that. So there's some factors there post transition. If you're going to go through the VA claim process and retirement physicals or separation physicals, those things all can play a role in what your overall picture of insurability may look like. So without getting into the weeds and specific things, that's the biggest piece of advice I can give. Get it plugged in as early as you can before a lot of those things are going to be present for you. There's no harm in that. It's something that you can lean into and feel good about. If you have diagnosis later on or through the transition process, that's something that it's an expected thing that you encounter, and where you benefit from it by leaning into it. You've got a couple of years where maybe having insurance on the surface doesn't seem like, okay, do I really need to do this right now? But really think ahead of what that picture is going to look like in just a short amount of time. I mean, look to your left and right. You've got people who have experienced significant life changes in a matter of days, weeks, or just a few short years, where their health circumstances go from a picture of health to they've got a lot of very, significant things that are going on. So something that's that quick, something beyond your control, an accident, whatever the case may be, you never know when those kind of things are going to come into your life. So you want to make sure that you lean into that as early as you can, so that any of those things that could compound or make your insurance risk go up, you can kind of get in front of those things. If you get to a point where you've gotten past that, don't let that discourage you from looking. Take your time, do some research, and be candid with the people that you're going to talk to. If you can be candid and let them know, hey, look, I am looking for, I've got some things going on, maybe that may be limiting factors. Be upfront. I appreciate those conversations because I can take a different approach. Then it's more of a consultative type thing. We can kind of have a conversation about it and do some research. I can do some research on my end and let that person know, hey, this is what that may look like for you, best case, worst case, and let them make decisions from there. Don't get yourself in a position where you're just filling out applications and hoping for the best on the other side. One thing I would tell you when you're researching companies, if you can't find or if you haven't found a company that will have that conversation with you, give you that feedback, move to the next one that will, because they're out there and they're willing to do that. Their membership is important enough to have that dialogue ahead of time, even if it means you go a different route. The important thing at the end of the day for you and for your family or whatever is important to you to protect is that you have coverage. So being able to have those conversations is important. So talk, do your research with different companies, talk with people within your network that you trust that have already made those decisions, and see what they did. What did they learn? What would they do different? Things like that.
Wow, that you have said it. You put it all in this nice little nutshell, and I really appreciate it. And I will tell you, during our sessions of changing focus, I absolutely foot stomp the fact that people need to have a policy that is going to replace SGLI, have that in place before they go for their VA physical.
Mhm.
That's an assignment that we give everybody. If you don't have that insurance policy, a civilian life insurance policy in place before you go for that VA physical, then you're not doing the research for your VA physical good enough,
Mhm.
or you're putting yourself in a box that you'll have to work a little harder to climb out of later.
Of course. Yeah.
And so thank you. And you also brought up another point that we talk about strongly in our session on dollars and cents in changing focus, and that is that it's so important to work with financial experts who operate from the fiduciary state of mind. And that's what you're talking about when you talk about having that consultative attitude, that conversation with people, that you're going to have a conversation to look for somebody in the insurance environment. And that's why I love AAFMAA, because I know that that's the outlook of AAFMAA is from a fiduciary perspective. Maybe not all the products are done from a fiduciary perspective, but I think in general AAFMAA operates from a fiduciary perspective, and that is to make sure that they are serving the client first and not
Of
the
course.
company first.
Definitely, and that goes across, all parts of the business, and that's the thing that I really like about it. I never, you never hesitate to have someone have that conversation with a wealth management professional, someone that's looking to make sure that their finances are going to be in order as they make a transition, or just do a check-in to see, how does everything look right now? Am I on track? Am I where I want to be? Or I have this goal financially, that's, at this mark out, 15 years, 20 years. Am I on pace to get there? Being able to have that conversation, get that consultation to be able to decide, sometimes the answer, yep, you're doing all the right things, keep doing what you're doing, or maybe consider this. And the same thing with on the mortgage side. I think it's just important, especially, as you make that transition, the opportunities exist. You have that period. Everybody's workload, their op tempo is going to be a little bit different during that time period, but there's things that you can do in your downtime. Send out the email, send the inquiries out, figure out the asks that you have. And again, that comes with talking to people that have already made that transition. Find out the things that they wish they knew and use that, put that in your toolbox so that you can ask those questions and do that research where it comes, whatever the case may be. If you're going to buy a house, if you're going to have someone help look after your finances or establish a trust for you, um, all those things, you've got the time to do that so that when you make that transition, whatever is next for you, all those things that are just really paramount are already taken care of. That's a huge boost right there.
Awesome, thank you. So, does AFMA do? And this is a loaded question because I don't know the answer to this, and I don't really like to ask guests questions that I don't know at least a part of the answer to. So, after you buy a term life policy from AFMA, uh, is is there any other follow-up with the company, or do you just have that and that's it? Uh, what about should should I, as a consumer, expect that a life insurance company is going to check in with me to make sure that my beneficiary is who I want it to be, and that kind of thing, without just in general trying to sell me something more?
Of course, yeah. I mean, that's something that's important, and that's something that we definitely do is reach out, to make on an annual basis. We have, the annual statements and things like that that go out. So anything that's applicable to the type policy or service that you have, you're going to get an update on what's going on with the company. We send, they're going to send that out, so you're going to be aware because it is a membership, and with a lot of companies, that's the relationship that it is with the members, so that they know what is going on with their organization. Um, so that is something that they can definitely should expect, not so much from the perspective of, well, this is just another sales call. That may be the case. It may be something where you're getting towards the end of a term, or there's a specific milestone based on your age or something like that from when you first set your policy up, that we will reach out and say, hey, we're at this mark. You don't have to do anything today, but just keep putting the warning out there for you to say, be thinking about these things over the next few months, years, whatever the case may be. Sometimes there's an advantage to going ahead and making a pivot at that point, because again, you're taking advantage of your health and age at that time. Again, it may be something where it's just, again, a reminder with your policy at this time, these are the options that you have. Let us know if you have questions. And, I think that's really important because if for myself, setting up a policy that's 30 years from that goes out for 30 years, at some point, it's not going to be a fresh memory where I set that up. Probably 15, 20 years into that, I'm not going to remember all those details. But knowing, a couple of years out from that, that I don't have to worry about that, someone will reach out to me. That's a huge peace of mind piece for me. And one other thing on that, as far as outreach goes, when it comes to, the time that none of us really like to talk about or think about, but in the event that a family member or beneficiary has to make a claim, one other thing that I think is super important that I really like that AFMA does, and as you do your research, find out what kind of survivor benefits are there for those that you're going to leave behind. Who will be there to help walk them through this process, similar to what we saw with the survivor assistance teams, whatever they may have been called in your respective services. What do they have to expect? For me personally, I want for my wife, my kids, whoever has to make that call, to have someone that's going to walk them through the process, help them with that claim, also help them put their arms around any other benefits that may be out there that I have qualified for through my service or that I've set up outside of that, so that it's one call, and they've got one person that's going to put eyes and hands on all those things and come back and let them know everything's in order. This is what is you need to do. Let us know what help you need. That's something that's super important, because it's one thing to file a claim and you get a check in the mail, but there's so many other layers to it to make sure that your family really has peace of mind and know what's going on. So having that survivor benefit is pretty important.
I agree. And the one thing that I will say too, from my own experience watching what happened to a widow, is that if you marry somebody and they already have, and this is for our viewers out there and our listeners, if you marry somebody who already has an insurance policy in place, make sure that you talk to them about changing their beneficiary to be you. As I, when the day my husband pinned on captain, we he had a team of people. We were at Eglin Air Force Base, and he had a team of people who were TDY at Nellis. We got home from his promotion to find the sad phone message that a bunch of guys had been out swimming at a safe place to go swimming, but one of them had drowned. And in the process of helping the widow afterwards, we found out that he had never signed his SGLI over from his mother to his wife. And his mother wouldn't give it to his wife. It was really bad. And so if you are marrying somebody, you need to have that financial discussion ahead of time. Find out about all of those kinds of things, and then make sure that after the wedding is over, that the that the beneficiaries on appropriate things are taken care of.
Of course.
And I suppose it goes the same way too. That if you have stuff, then your spouse needs to become your beneficiary. But I've seen what happens. Two cases. That was one case, and then I was a survivor assistance officer, casualty officer, waiting to go to flight school at Fort Rucker many years ago, before the time. And part of the reason now why spouses have to sign to give up SBP. This retiree had not signed for SBP, and he died without life insurance. And so not only did his retirement pay stop, but there was nothing more coming in except for Social Security for this widow, and she was elderly. And I remember thinking and crunching numbers with her and thinking about what she was going to have to survive on, that it was just Social Security that she was going to survive on for the rest of her life. And so I think that that's important to have those. That's what life insurance takes care of, and personal savings and investment programs and wealth management. And you don't have to have a lot of money to call it wealth management. Whatever amount you have, that's your wealth. And so that's why these kinds of discussions about life insurance, to demystify it, are important to me.
Of course.
Okay, so is there anything that we haven't talked about, Jeremy, that you think it's important that people know in their in their thought process about life insurance?
I think, again, there's a lot of the questions that I get asked on a daily basis when I speak with folks that are just getting into the conversation is, how much life insurance do I need? How long do I need it? Or how long do I need this much? There's so many different answers to that, because every person's circumstances are going to be a little bit different. Those time frames are going to look a little bit different based on your age and what's going on. Again, it's really easy. You can go online with a lot of companies now, or you can make a call to a lot of insurance companies, and you can start a policy in a very short amount of time. You may have to take a physical assessment or something like that, but it's a relatively quick and easy process. But in that process, make sure you build in time to figure out what questions you need answered before you get started with it, because that way you make sure that you have the appropriate amount of coverage, not too much, not too little, or that you are putting yourself in a position where, as your circumstances change in the foreseeable future, that the monthly premium that you've selected is going to be something that will work for you. Through a few different contingencies. If something happens, if you change jobs, is this something that you're going to be able to maintain? That's something that we don't think of. you don't really think about too much, especially if you're transitioning. It's never been a thought that you've had to consider. But once you're post transition, it may be something where you go from one position to another. But just making sure that that is something that's plugged in, that is manageable for the duration of that policy. That's something that you want to think about. A lot of times, you may have someone that comes in and says, I want max coverage for the max amount of time. And that's based on their income at that particular moment in space and time. But circumstances could change, and you may have to call back later and say, okay, I can't do that anymore. Make sure that if that's the case, one of the questions that you ask up front, if my circumstances change during the time that I have my policy, am I able to reduce the amount of coverage that I have? That may, in the end, reduce my premium to help me get through a time that I need. I've had conversations like that with folks, and that's one thing. In most cases, you're able to make that modification. You can go down, and as you can imagine, bringing it back up, that's a different process. You usually have to start from the beginning with the new policy if you want to add additional coverage, but the flexibility to come down and get your payment where you need it to be at that time is usually a good approach. Now, if you've gotten quite a bit older, that might not be a viable option. That's one thing I want to throw out there, because that's another question I get. Someone who's had a policy 15, 20 years, they want to cut it in half or into a quarter of what they initially set up, but because of their age at that time, they would be paying essentially the same amount for that
Mm,
reduced coverage amount. So it's a better bet to
no
just
point.
stay where you are. But if you're within that first 5, 10 year time frame and your circumstances take a sharp turn unexpectedly, make sure that you at least know that that's something that you can do, that you have that safety net, because you don't want to lose your coverage and then go through that period. It's already uncertain, if you have to find another job or whatever the case may be. Losing something like your coverage is not something that you want to have to endure during that, and there's ways that you can lean into it and not have that happen.
That's a really good point. Thank you for sharing that. That is a wonderful thing for people to think about, is to make sure that when you are calculating money to have in your safety net budget, that you add in the premium for your life insurance. It's not just what it takes, because that's part of what it takes to run your
Mhm.
household.
Right.
Don't not to leave that out. So thank you so much, Jeremy, for spending time with us today. I am going to put the AAFMAA web page up here so people can see where to find your company. It's the Army and Air Force Mutual Aid Association at www.aafmaa.com. And then I'm going to put a um, a link here, if I can copy it. I had it copied at one point. Now it's being stubborn. Put a link into the chat with the page at the AAFMAA website that has a whole bunch of articles and posts about life insurance in general, the kinds of things that you all have questions about. So thank you so much, Jeremy, for being with us today. I really appreciate it. And thank you, everybody, for watching us today. We will be back here again in March with a personal development, probably a self-care topic. So thank you so much, Jeremy. We appreciate you spending your time with us today.
Thank
And
you. It's
thank you,
been a
everybody.
privilege.
Bye-bye.